In this week's episode, we are going to explore what you can do to make sure that you've got enough funds to be able to take a trip every single year. I was in the Atlanta airport and saw an ad for how can you be a honey boomer. I thought it was really clever. That's what we're going to discuss today. Let's roll.
Welcome to the Safe Money Retirement Show with your host, certified financial fiduciary, Tim Wood. Tim is a retirement and income planning expert, best-selling author of Safe Money Retirement, Your Game Plan for Success, member of the exclusive Ed Slott Master Elite IRA Advisor Group, and founder of SafeMoneyRetirement.com. Tim uses an education-first approach with clients nationwide to ensure they understand their choices in planning their own safe money retirement. Tim focuses on wealth management, retirement income, tax and long-term care planning, and asset protection and growth strategies. And now, from the Safe Money Retirement Studio in Johnson City, Tennessee, your host, Tim Wood.
So what is a honey boomer and why would you want to be one? I was in the Atlanta airport recently and I saw an ad, full big ad, that had an older couple standing obviously on some sort of a vacation, and it said, be a honey boomer. How can you know that you have enough money to take a trip every single year and basically take a honeymoon every year as a boomer? See where they're going with that? I thought it was really interesting. That's what we're going to get into today. But first, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, what are you waiting for? We will send you a copy absolutely free with no charge and no obligation so you can start planning your own retirement by knowing what's available out there. Just give us a call. It's toll free from anywhere in the United States, 1-800-913-SAFE. That's 800-913-7233. Or just log on to our website at safemoneyretirement.com and request your free copy right now. So what can you do to know that you can take a honeymoon every single year? Well, the first thing that you've got to do, and y'all have heard me talk about this before, you've got to make sure you are not underliving your retirement. That's a really big thing, and let me explain what I mean. There are a lot of people out there that live they scrimp so much. They scrape by, they try not to spend anything. They don't want to go on any trips now because, what if this happens and what if that happens and what if they lower my Social Security and all that stuff. What can you do to know that you're going to have that guaranteed income? And even if Social Security does get cut by a little bit, that you've got something to replace that so you don't have to worry about it, so you can take that trip while you can. Another thing people have heard me talk about over and over and over is being in the go-go years, the slow-go years, and the no-go years. While you're in the go-go years, while you feel like going, you need to go. You're not getting any younger. Things aren't going to get better as you get older as far as wanting to go and feeling like going and being medically able to go. If you can, you need to go. Well, what can you do to be able to retire, to know that you can take another one of those honeymoon type trips every single year and be a honey boomer? Well, here it is. Knowing that you've got enough income that's guaranteed. Again, we're not talking about just having a pile of money and taking some out, because depending on how long you live, you could run out. Now, if that's the strategy that you're doing for your retirement, you probably can't do this. Being a honey boomer probably isn't for you, because if all you're doing is just withdrawing money, especially if that account is still all at risk in the market, goodness, you absolutely cannot do this, because what happens if there's a drop in the market? Again, that pesky market math. If the market goes down 30%, you need between 42 and 43 just to get back to where you were. So depending on how long you have, that can make a big difference too, but that's kind of a side thing. What you need to really focus on is, are you going to have enough guaranteed income? Because if you're just pulling money out of an account, then maybe you don't want to take these trips because you could run out of money. What happens if you've got enough money to last you till you're 87 and you live to 97? With medical technology today, that's not necessarily far-fetched. We're getting more and more people over the age of 100 every single year. Look it up. So you need to make sure you've got enough income to last. And if you're just pulling money out of an account, well, you've got to hope it lasts. So in order to be a honey boomer, in order to take these trips and do something just wonderful every single year that's like another honeymoon. Imagine going on another honeymoon when you're 67, then 68, then 69, then 70, and every single year you're doing these incredible trips with your spouse or by yourself. Doesn't necessarily have to be with a spouse, could be by yourself. But being able to do that and knowing that you've got enough guaranteed income and that you can't outlive it, no matter what happens in the market, no matter what happens with Social Security even, that you have got the guaranteed income from a top-rated life insurance company that you can count on that's going to pay you guaranteed income. That's what this whole thing is about. What is the Honey Boomers about? Yes, it's about taking trips, and that's great. I really want to stress that you can't really plan unless you know what your guaranteed income is going to be. If you are just praying to God that you have enough money and that your pile of money that you're pulling from is just going to last, good luck. I know way too many people that have done that and wound up, living longer than they thought. And that's even before the medical advancements that's going on today. You need to prepare. You need to make sure that you know you're going to have enough income when you're in your 80s and 90s. So in your 60s and 70s, you can go do the things you want to do. It's different for everybody. It might be going to Ireland. It might be going on a cruise. It may just be flying out to Arizona to spend time with your grandkids for a month. It might be taking your grandkids to Disney. Whatever it is that you want to do, it's different for everybody. But having a guaranteed income plan will allow you to make a plan that you can count on, knowing that you can take those trips and do what you want to do and not have to worry about the income, not have to worry about spending too much and running out, because if you spend the check for this month, guess what? One's coming next month. You spend them all for this year, guess what? More's coming next year and the year after and the year after. Long as you're breathing, they're sending those checks. That is how you can be a honey boomer.
We all know that friend who's retired and still has to work. The one we've said we won't end up like, working till we die. But are you sure you're prepared? Hi, it's Glenn Beck, and I want to introduce you to Tim Wood. He is the owner of Safe Money Retirement. He's a certified financial fiduciary, and he makes sure that his clients aren't going to be that guy. Tim can help you know you'll have enough guaranteed income to cover you and your spouse for as long as either of you live and protect your money from the next market crash while it grows. Tim's helped hundreds of families know that they have a plan they can count on. I don't just trust anyone. Do your own homework with Tim Wood. Go to safemoneyretirement.com/Beck or call Tim. See how Tim can help protect what you've worked so hard for all those years. A safe retirement. Go to safemoneyretirement.com/Beck or call Tim and protect your money from the next market crash while it grows.
In today's case file, we are going to look at Joe and Sarah. Now, Joe and Sarah had a couple of very specific things that they needed to take care of when we got together, and that's what we're going to talk about. So the very first thing, y'all have heard me talk about this over and over and over, so it's not going to be anything new. When they retired, they were going to have a gap in their income. So we looked to see exactly what both of their Social Securities were going to be when we turned them on, or when they turned them on, I should say, what that was going to be versus what their expenses were, and there was a gap there. So that was step number one, is we got them in a guaranteed income plan to cover that gap. That's the most important thing. Retirement's all about guaranteed income, so we got that taken care of. But then they had one other really major thing, and this is big for some people, and some people it's not. That's fine. Everyone's different. But their big thing was they were really, really concerned about the potential for Social Security having to reduce the benefits that it's paying. Many of you have seen the studies that came out, and basically if things aren't fixed by Congress or by somebody in the government up in Washington, that in 2032, this congressional report showed that in 2032, somewhere around there, they were going to have to start cutting benefits by 20 to 30% just to keep it solvent. So this couple, they were really worried about that. So here's what we did. We got them that original income plan. They got the income that they needed right now when they retired, that they're going to turn on as soon as they retire to go with their Social Security. Boom, they've got enough. But what we also did was we started them a smaller plan that's an income plan that's just got a guaranteed roll up, which means that income amount is going to grow every single year. But we didn't have to do a really big one. We did a smaller one. And the whole purpose of it is, if Social Security ever cuts their benefits, well, now they've had this smaller account, but it's just growing every single year. It's getting a little bit bigger. That income's getting a little bit bigger and bigger. If Social Security does wind up cutting the benefits, it gives them something that they can turn on immediately to immediately counteract that, so they don't ever have to worry about any reduction because they've got something that they can fall back on. Now, if Social Security doesn't ever cut benefits, if it's the good news for everybody and they never do, great. They've got another little plan they can turn on at any point in their life when they want to add a little bit of income. Now, how can this relate to you? How can this work for you? You might be in the same situation. You might, whether you need income now when you retire, or even if you're retired now, the thing is, you might have a real concern for income in the future, whether it is Social Security dropping benefits or reducing benefits, or it's just inflation, because we can't plan for inflation. We don't know whether inflation is going to stay high like it is now or where it's going to go. So a lot of people really just have a concern for future income. Well, what's a solution for that? What you heard that I did with Joe. Basically, we sat down and we got them a smaller plan that's going to continue to grow guaranteed every single year that they defer. You can do that same thing. We can put an amount into a plan that's going to grow every year until you wind up turning it on. And guess what? If you never turn it on, all of that money goes as a death benefit to your beneficiaries. So there's really no downside to this. It allows you to have a plan that you can turn on to get you some extra income in the future, whether it's from Social Security lowering benefits, or you just need more money, or it's a medical thing and you need more money. Whatever the situation is, it doesn't matter. A lot of you have a concern with future income, and that's the best way to be able to overcome it, because you're getting guaranteed growth for every year that you defer, and it gives you the ability in the future to turn on an income stream that you can never outlive, and neither can your spouse. And if for some reason you don't turn it on, great, your beneficiaries just got some extra cash dumped on them when you're gone. It's a great plan, something we can sit down and talk about each person individually. That's why we have to do these things individual, because everybody's different, but it really might be a good fit for you and your situation. Let's chat about it. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood, reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your income in retirement is guaranteed lifetime income and not if-come. Avoid any future market losses, plan for the potential of long-term care, and make wise planning choices so you can have the retirement that you deserve. Call us now for your free copy of Tim's best-selling book, Safe Money Retirement, Your Game Plan for Success. Our toll-free number is 800-913-SAFE. That's 800-913-7233. Or log on to our site at safemoneyretirement.com for more information or to request your free book. Thanks for joining us. We'll see you online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Obviously, by contacting us now, you are only taking the first step toward protecting your retirement. No information presented today should be acted upon without meeting with a qualified licensed insurance professional. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Interest and other guarantees in annuity contracts are subject to the claims-paying ability of the insurance carrier that issued the contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.